Good morning, everyone. It's Monday, August 15th. Taking a look at the morning charts this morning, we've got the US dollar index. It's the 60-minute chart. If I just zoom out a little bit, you'll be able to see that we've been in a strong downtrend, and we've more or less been flagging sideways here with some sideways chop. The past couple trading sessions, we've seen the US dollar form this mini head and shoulders up at resistance, and the fact that we had made a lower low previous kind of signified that I think we were going to go a little bit lower and come back down to this area and possibly even a little bit lower. And of course, a drop in the US dollar should help boost the equities market, and I think that we'll see money continue to flow out of gold a little bit and into equities as they are way oversold here. So taking a look at this chart, you can see we're starting to fade and drop this morning. I do have about a 74 price target on it. If we do break that, we could end up going right back down to this this double bottom around the 73.50, 73.40 area, which is a pretty good fall, and that should actually help send equities sharply higher if we do get that. Taking a quick look at crude oil. This is the daily chart of crude oil. The recent weakness in the US dollar, and also the fact that crude oil is so oversold, getting a little bit of a bounce here, and it's kind of pausing at this gap here. It had a gap fill last week, and now it's kind of trying to resolve what it wants to do, if it's going to roll over and continue to go down or go sideways, or firm up here and build a base and then actually start to move up to the 50 period moving average. We're just keeping our eye on that right now until we see something unfold on more of an intraday basis. But right now, on an intraday basis, if I just was to jump to the 60-minute chart, you can see we're more or less just kind of forming this wedge action here, and I'm not a fan of a rising wedge. Usually it'll start to get toppy, just like what it is here. You start to see these kind of these moves up, the pullback, sharp move up, sharp pullback, and it starts to get choppy. You could be getting even a mini head and shoulders here, and we could see it break down and come down into this support zone here, where it could firm up and start to maybe provide a setup to the upside where it'll trade sideways and back up again. But right now it's in this rising wedge, and I think if it starts to break down, which it may be starting to this morning, I think it'll have it could correct a couple dollars a barrel fairly sharply still. So I'm not looking to go long here, although it is trying to put in a bottom and firm up, but it's just a little overdone right now, and it does need to pull back. Taking a look at the gold chart. It's a 4-hour chart of gold. You can see here we had a nice run up, and it's pulled back. It's trading sideways here. It is coming down to the key moving average. There is a chance if we get another thrust in gold, we could potentially see another thrust or two. We could see a bit of a new high made. It could pull back sharply. We could see another new high made, and then from there it could actually top out. But overall, if I go to the daily chart, you can kind of get a better feel for what I'm seeing here. More or less, when you see a market form a bit of a base, and then you'll see it break out and usually test the base, and then it'll start to grind higher, and then when it picks up speed, it'll kind of a blow off top, and you'll see some good volume, and then you'll see it get stepped on with really hard volume, and then from there it consolidates for usually several months. And that's where we are now. We had the breakout, we had a little bit of a pause, and then it started to grind higher, and then it went into more or less parabolic mode where it shot up sharply, and it's starting to come down on heavy volume. And if it can't hold the level that it's at right now, I think it's coming down quite a bit sharper in the next couple days, which is why we have our protective stop set right up here, so that if it does go into kind of free fall mode for a few more sessions, we'll be exiting with a profit with that balance of our position there. So that's kind of where we stand on gold, and there's a good chance it could trade in a relatively large sideways range here for a couple months as it forms another base, and maybe the equity market will firm up as gold trades sideways. So that's kind of what I see happening with gold there. Looking at silver, it's in much the same boat. Silver hasn't quite performed the same as gold, but overall, silver, it had that huge parabolic run up, and then it got stepped on, and it's still trading within this very large range here. It is a huge range compared to what gold was trading in, but right now is really trading in no man's land. And it actually has a little bit of bearish price action. We've had some strong selling to the downside, and it's forming a little bit of a bear flag or a pennant here. and downward target actually looks like it'll go right back down to probably the 200 period moving average, which is also about support from these previous lows. So I'm not too bullish on silver right now. The price action has kind of turned a little bit more bearish. It was looking strong over here, but that pop and that sharp drop on heavy volume wasn't a good sign. But overall, it's trading in a sideways pattern, and I'm neutral on silver right now. Taking a look at the SP 500 daily chart. This is the SPY ETF, which mimics the same. You can see we had huge panic selling. This red indicator indicates we had more or less greed buying. A lot of people panicking, buying back in, anticipating a bottom. And we've had a pretty good pop. We were in some extreme sideways chop here. We are trading up at a pretty major level that we could break through. If I just go to the 4-hour chart, let's go to the 6-hour chart here actually, or 60-minute chart. You can see we've had this continued sell-off, and right now we're trading right into some key moving averages. We are trading above them, but we do have this this gap fill right here. We have this gap that we're trading in right now, and that's where we're kind of taking a pause and a breather. This price action looks pretty good though overall. We've got more or less a cup, and we've got this handle forming, and we're right under a key resistance zone filling that gap. And if we were to take a guess here, the chart is pointing to a substantial move to the upside that could be very strong even out of this cup handle. We've had a nice move up to the upside already, but we could see more or less this entire move here, which is about a 7-point move. We could actually see that 7-point move to the upside again, so there's a good potential for another continued move higher. Now if we take a quick look at the futures chart this morning to see where we stand, the market seems to be holding up pretty nicely. And if I just zoom out a couple days, you can see we had the bottom put in. We had a nice strong rally to the upside, and really since then we've just been trading more or less in this sideways range. You could say we're trading in this range, or we're trading up nice and high above this 200 period moving average. But the fact that it's just been trading sideways, and there's relatively light volume, this is a nice breather, and we could see a very nice surge to the upside when it breaks out of this pattern, if it does break out here. So that's kind of where we stand. And that's about it for this morning. I'll talk to you guys in a bit as the market unfolds today, and we'll go from there. Talk to you later. Bye-bye.